If I'm a new grad, no job, have 55,000 liquid, 2,000 a month expense, half rent, should I dump 70% liquid cash into the market? Okay, that's a lot to take on. Do you mean like, okay, do you have student loans, sir? Stop saying yes to him. Is Verizon down because of the dividend? Mostly because of the new CEO. Not now, bro. It's all-time high. We had 53 all-time highs last year. If you would have told somebody not to buy because it was all-time high, they'd be sitting on the sideline fucking unbelievably upset. You cannot not buy something because it's at all-time high. Okay, that's just not how it works. That's why dollar cost averaging is so important. Don't try to time it. Just buy. Every month, every 2 weeks, you're going to buy the highs, you're going to buy the lows. And eventually, the market's going to go back up, and all the lows are going to go higher, and the highs are going to go higher. Bro, I don't know. I mean, at your age, I would say just be very, very careful with anything that is, make sure that you, are taking care of any high interest debt you have. Don't blow your money on anything else. But if you have a job or you are, definitely looking to seed in a 401k and an IRA and making sure that you got yourself under budget. Because the thing is, if you just mass dump it into the market and the market does go down, you're not getting a tax advantage. So what I'm saying is make sure you're taking advantage of tax advantage before you start putting in the market, like in a tax advantage account, whether it's 401k or Roth IRA, rather than just a taxable brokerage, because then you're getting hit on taxes on both ends of it. So, work on that, but fucking start putting it in there, man. Because here's the thing, you have the ability to be more risky at this age. And so if the market does fall, you're like, okay, well, I got plenty of time. So you buy the dip, it's no problem. All right, let me just do a quick cursory check over here at what we've got going on. Got bailed out on Fly big time. Are you still in Mir? Of course I'm still in Mir, yes. I think Mir is going to be the next NNE, Oklo, SMR. I mean, potentially. For reasons of my own, my investments are in a taxable account. How long would you hold a stock if it's up big and you believe in the future of the stock, but have not yet held it for 1 year? Yes, I'm investing and not trading, but I always consider the possibilities of a pullback. You're trying to time it and without understanding. So here's the thing. If you're in something and it's long-term, even if it's up massive right now, the question is do you have somewhere better that capital could go? If the answer is no, you just want to sell because it's up so high, why? Well, because there could be a pullback. Then just buy that dip. Because if there's not a massive pullback or the next pullback is up another 100%, you've given up all of that capital return. It's long-term, so why do you care it's up so much? Instead of focusing on when to sell it, you should be focusing on when to buy more. If it's an investment, it's a time out, right? You're selling at a certain time. If it's a trade, you're selling at a certain percentage or dollar amount. So DCA instead of lump sum, even though lump sum tends to do better. See, here's a problem with that is that they can't quantify exactly the difference between lump sum and DCA because they have a very small sample set. Okay, I'll give you an example. Dollar cost averaging versus lump summing. Well, it depends on when you lump summed versus when you dollar cost average. I have my VU has outperformed actual VU because of my strategy of buying an additional share if the market falls more than 1% intraday. Because even if that happens 10 days and we see a 10 to 15% pullback, that's only 10 buys on the way down on top of my dollar cost average. And then it goes back up. And that's a big drop, right? So there's always little strategies there. I wouldn't say lump sum always outperforms DCA because you'd have to take everyone's DCA and everyone who lumps sum, and you can't quantify that because how are you going to get every single investor, right? I say do what makes you comfortable. If you have a good paying job and you think you're going to make more money down the line, fucking lump sum it right now. And then if it dips, dollar cost average then. But if this is a lump sum and you're going to have, and it's like a lot, you can DCA. But see, here's the thing. DCA is set up every way. You could buy, let's say you have $50,000. You could buy $2,000 a week, right? For 25 weeks. Or you could buy $1,000 a day for 50 days. You know what I mean? You can set up that DCA however you want, right? A month and a half from now is a good time frame. If the market keeps running, you're DCAing in pretty hefty on the way up. But if there's a sudden drop or a pullback, you're DCAing on that way down pretty quickly. You see what I mean? Like it's not about trying to time it specifically, but everyone has their own strategy. If you gave me a bunch of money right now and said, do I lump sum it in the market or do I dollar cost average? I would dollar cost average, but I would do it frequently. You see what I mean? Because there's a lot of uncertainty right now, but at the same time, there's no reason for the market to capitulate. People keep thinking that a piece of bad economic news is going to drop this market. No, if anything, bad economic data is driving the market up higher because people are more scared of holding their money in other assets or non-assets or cash. So they're putting it in the market. And because everyone's doing that, it's just driving the price higher. In order for the market to actually just drop out of nowhere, you would need a reason for people to sell all their stocks. The average American does not watch the stock market on a daily basis. They don't follow the Fed news. They don't follow the fucking tariff news. They just look at their 401k and they just do their, whatever, and they look at the balance. That's it. You guys are really, you guys are really into this. But most Americans are not. And because so much of retail and so many Americans are in the market now, even large firms are having to think before they sell positions. Because there was a time where they saw something coming, they liquidated. Or they pulled out, or they trimmed a position because they saw something coming and it dropped it, and other institutions and other algorithms picked it up and it caused a bigger fall. But because retail are pumping $5 billion a day and CTAs are $5 billion a day, if you sell off a position and that gets bought up and you're out of it, you're a large firm, you miss out on big money, right? It's insane. Here's the thing. There are people making ungodly amounts of money on a 2 and 20 right now, underperforming the S&P 500. Welcome to the future. But you would need a reason for retail to pull their money, okay? And I'm not talking about just firms that have 401ks, mutual funds, and stuff like that. I mean retail as well, because they're going to dollar cost average into it. And so it changes the game. Are we in a bubble? Sure. If you're on the sidelines, everything is a bubble. But how long does the bubble go before it bursts? And the thing is that people misunderstand. You want these bursts to happen because you're young and you can buy more. You should never, if you're under 50, you should never be afraid of a stock market drop. You should be begging for them, number one. And number two, sure, the market is, sure, there'll be a bubble burst, but the question is if you wait for a 30% drop in the market, but the market runs 100% from that time, you're like, I told you it was going to happen. Cool. I'm still up 70%. That person that's been waiting still won't know when to enter. And even if he bought the bottom there, he missed out on 70% returns before the next run. We're up 70%. We just dollar cost average down. Look what happened in April. The sky has fallen. The economy's gone. The world is done. Tariffs are going to destroy us. Listen, this guy in the White House is doing some stupid fucking shit, okay? And this is a lot of shakeup, and there's a lot of crazy shit going on. But nothing is irreversible. Nothing has made the U.S. market uninvestable 20, 30 years down the line. You're wrong. You're an idiot. You don't know shit. Fuck, I read it on Reddit. Oh, I told this. I know it. Okay, bro, I'll buy your shares. Liquidate your portfolio. That's where we are. And now we're up 35% from that. My biggest hater in the world is my ex-mod who made a fucking fake Twitter page and bought a bunch of followers to just do nothing but fucking hate watch me. Quoted me when I told Jake and Bacon April, just buy the dip. This guy's an idiot. Doesn't know what he's talking about. He's fucking stupid. He's going to give it. Fine, whatever you say, buddy. I'm sorry you missed out. Hey, stock guy, how's that Intel position going? You're a fucking... I just sold half of it for like 85%. And I'm not even happy about that. I got bailed out on that one. Don't get me wrong. It is what it is. Now the thing is oh, you've got cancer. I hope you don't die. I hope you stay alive long enough to know that people know that you're a grifter. I'm a grifter. I'm live every day. I love that shit. It motivates me.